Hi, and welcome back to the European VC, the go-to podcast for everything European VC. If you love our show, share it with your friends and join us in the EUVC community syndicates at theeuropeanvc.com. Today, we're happy to welcome Marvin, partner at Diaspora VC and board member at Game Groove Capital, an international gaming holding company. He was previously a partner at VC Fund 500 startups. Marvin has invested in over 414 pre-seed and seed stage startups, and we were lucky enough to record this episode with him during How to Web. If you enjoy our content, do support us by hitting the follow button, giving it a review, and following us on LinkedIn. Want to be on top of who the best up-and-coming emerging VCs in Europe are, and maybe even invest with them? Register for our newsletter at theemergingvc.substack.com and be the first to get in the know.
Marvin, welcome to the European VC. We are here recording from How to Web in beautiful Bucharest. Let's start with that. Why are you here?
Bucharest, Romania is an amazing ecosystem. Bogdan, who puts on this conference, has been an old friend. So I think this is my third time I've actually been at the speaking at the conference. So I'm a big fan, like to support the ecosystem, and I've invested in at least 2 Romanian companies in my previous sort of VC fund. So I'm a big fan of the ecosystem in general.
So third time here. So the other 2 times?
Second or third, I'm pretty sure. I mean, I go to so many conferences.
So you were here pre-COVID, right?
Yeah.
You see differences. Has the event changed? Is it exactly the same?
I mean, this is way bigger.
Yeah?
This is way bigger. The engagement level, I think everyone's just excited to get back after 2 years of bullshit Zoom, right?
Fuck yes. Okay, so now let's get into the typical, let's call it agenda of the European VC. And we'll start with the question, tell us who the hell is Marvin? Who the hell is Diaspora Ventures, and why did you come up with that name?
Okay, yeah, sure. So I'm Marvin. I'm an old man in tech, in the startup ecosystem, the tech ecosystem for about 22 years. So I'm originally from Canada, moved to the US to get rich and didn't quite work out, but I did the startup thing for about 2 years. So I was very, very early at a startup that raised about $63 million. So I saw the company go from about 18 people to 150 people in 6 months, and then it went the other direction during the first dot-com bubble. Very, very lucky then to end up at Yahoo. So I spent 10.5 years there as an executive, running a lot of global expansion across the world. I took 2 years off, did the angel investing, was terrible at it, but learned a whole bunch. I mentored at 24 startup accelerators all across the world. So that's probably what I'm known. One of them happened to be 500 startups. So when they opened up the San Francisco office, they asked me to join. So I became a partner, helped run Fund 3 and Fund 4, ran the core accelerator program. And in the 6 years there, I invested in over 414 pre-seed and seed stage startups. End of 2019, I left due to difference of opinions on our side, which is fine. They're great people, right? So left end of 2019, trying to figure out okay, what do I do now? And then 2020, the pandemic came. I think first 3 quarters were kind of a write-off. And then afterwards, started doing angel investing, joined a bunch of boards, joined a bunch of investment committees. And then I joined Diaspora in 2021. And so Diaspora, who we are, we're a rolling fund. So it's a rolling fund structure from AngelList, and we're based in the US. So me and my partner, Carlos, he started it in 2020. He was one of the first rolling funds. And so it's a new mechanism. So if you're not familiar with the rolling fund structure, it's basically SaaS for LPs. Yeah. So you basically put a certain amount of money and you commit for minimum 1 year, 4 quarters. And so we invest about $500,000 per quarter. Our thesis is very, very specific. We invest in European founders who are coming to the US market, right? Particularly we do a lot of SaaS, developer tools, Web3 companies, and it's working so far pretty well. So we're at 32 companies we've done. So we do about 3 to 4 companies per quarter. And Carlos is a full-time Web3 founder, and we do this on the side. And he's a fellow friend, a newbie to Silicon Valley. So he's been in Silicon Valley now about 10 years, had some quite a lot of success before. And I actually was his mentor when they started Refiners, because I knew the accelerator business. So I spent a lot of time helping them with the accelerator business and as an investor. And now we're working together because you get to work together with friends. Nothing better than that, right? Just like you two.
We hate each other.
Oh, well, that can work too. That's a very different dynamic, but that can work too.
I always want to outshine him, and he tries to outshine me, but he fails.
That's why we bunk beds whenever we go places.
Exactly. We could talk about that in a
Whatever
different
works.
episode.
Whatever works, man. I don't judge, man. It seems to be working well.
It's a hate-love relationship.
Exactly. Let me ask, a very similar question, but in a slightly different way, because I love to ask it this way.
Yeah.
What is your secret sauce?
I think both Carlos and I have been operators. We both invest in a lot of companies. So I think between the two of us, we've done over 500 plus investments. So you got to be a moron, like not to know how to invest right after you do that many. Really, like everyone's like, oh, you're look at you, and I'm like, no, I'm like Forrest Gump of Silicon Valley. I just kind of like ended up doing these things. So frankly speaking, there's a lot of young, smart investors. They just don't have my data sample set. Yeah. That's the difference, right? And also, I was also very, very lucky to be mentored by some like really, really good investors and to work with like really, really great investors, like Edith Young from Race, Sheil Minot from like Better Tomorrow, like all 500 colleagues of mine. So seeing, like you get to learn from each other. I was mentored by like really, really great guys, like Mike Maples, who was incredibly kind and generous with his time, and my good friend Tim Chang, who was at, I believe he's still at Mayfield. Unfortunately, the pandemic has kind of like cut off a lot of us in the last like 3 years. But these are all people that were like incredibly generous with like their time to sort of like, when I was first starting off, with just like, you don't know what you're doing, right? There's no books you can read about like how to be a great VC. But it is helpful now having a lot of podcasts, right? 20-minute VC and also just like having exposure to like really good investors like Jason Lemkin, who's a friend. He's fantastic, incredible investor. His portfolio is like, or another guy, Kevin Hars. Kevin Hars from Eventbrite? Yeah. His portfolio, holy crap. We became friends, but I brought him in for the accelerator to sort of like do a talk. And I'm like going and looking at his Wikipedia. I'm like, oh my God, this is your angel like portfolio? Like that list is like, this is like the most like, it's like, wow. Like what I've learned in Silicon Valley, which is like, doesn't matter how smart and how successful and how rich you think you are, there's like hundreds of thousands of people who are just so much better. So like, I don't understand the arrogance. Like, how can you be arrogant? Like, you have to have some level of humility because there's just so many really, really like amazing investors and really, really amazing operators that like, I feel like crap over there, which is kind of good, right? It makes you sort of like be more hungry, right?
We could talk about that point of the big egos that we see in venture, right?
Oh,
Let's not go there because we would.
I mean, here's what I will say, right? I've been in this game for a long time, like in the tech game. And what I say for a lot of VCs, where it's like, there are two types of VCs. There are those who are humble and those who will be humbled.
Some of the best VCs and coolest VCs and that are doing the most incredible stuff and backing the most incredible founders that we meet are really nice and cool people.
So,
and the funny thing is, they didn't become nice people after they had success.
They were nice people.
Yeah.
From the get-go.
I mean, the money actually exacerbates who you are as an individual, right? Like I have a lot of very well-off friends, and the money either turns them into like really horrible human beings, which was inside them before, or turns them to sort of like really, really accentuates who you are. I mean, the humility thing, right? Like, when I first met Mike, he really listened. Like, he's the guy who takes notes. And I'm like, wait, I should be taking notes, dude. Like I should be the other way around. I should be taking notes from like what you're saying. Just like, I'm like, wow, I'm a very accidental VC because my experience with VCs prior to 2011 was super negative. Most VCs in Silicon Valley were like not nice people. It only became nicer because you had a lot more operators and ex-entrepreneurs coming into the ecosystem. Also the competition. So you can't have that. Like there are still some VCs, like, Kosa guys, like they have a reputation of being assholes, but like he can because he's been a Kosa, right? Like I just think like, yeah, but that tends to
but we have the same in Europe, right? To be very frank, and I'm sure some of them are listening to this episode now and will say, Andreas, I don't agree at all, and who are you to say that? But in Europe, the big brands are also carrying the reputation that, well, they're not always the nicest guys that they are hiring, right?
And I always say, like, my reputation, I don't know if I have a reputation of nice guy. I have a reputation of being very direct. So a lot of my founders, like I'd say 20% of my founders don't like me. I'm very direct, right? But the way I think about it, where I think in Silicon Valley it's taken too far on the other side, where it's like, it's very Californian. It's like, oh, we love what you do. And there's literally no feedback. And you're like, well, I'm not sure what that means, right? Like, it's like, is that yes, no? Like, you see, you have no idea. Versus I do sometimes prefer the New Yorker view where it's like, yeah, this sucks and this sucks and this sucks. You're like, at least I know where I stand. I do think there is a balance of sort of, you can be supportive, but you also have to be very direct. I'm very direct with my companies, or very direct in general with most companies, because it's like, your job is to be of service to them. And if I'm lying to you, I've had many founders come back like who I even didn't invest, and they came back and said like, hey, you were actually the only one who told me the truth. I said, I don't think this business model works. Here's why. I hope I'm wrong, and I hope you prove me wrong, but this is why I'm not doing the deal. I do think I can work on being a little bit more diplomatic, but having said that, it's just like...
But I think this is the perfect segue into something else that I wanted to talk to you about, because last night at Venture and CEE, we had a panel where you said that you felt or you think that the US ecosystem is more cooperative than the European. And I thought, yes, absolutely. And then it was kind of like there was a vibe in the room that said, you're not right.
Yeah, they were pissed. But like I said, I think they took it the wrong way. So for me, where I'm like, it wasn't like, oh, this ecosystem sucks. That's not the case. I spend a lot of time out here. I see the growth and development. And so I've invested.
If you said that, we would kick the shit out of you.
And I've invested in a lot of companies all across this region. So like I'm putting money where my mouth is. I think there's a difference of maturity of the ecosystems. And so it's you can still do a lot of win-lose deals here. The mentality is not of abundance, in my opinion. It's still like, these are my deals and I'm going to win this over these other people. And yes, there's an element of that, but I think there's like we talked about this. Like, look at the cap tables in the U.S. where there's a lot more investors. I'm in a deal; it's not public yet, but they have Sequoia, Founders Fund, OSS Fund. They have like Michael Dell's and also a whole bunch of like operator angels. It's very sort of like inclusive because we're like these are all the people that can actually bring value.
And Sequoia could have taken that whole round. They could have done it, no problem. They've got a huge fund. They could have done it. That's not the mentality.
Well, I would say Sequoia does have pretty sharp elbows compared to a lot of the other folks.
No, but it's not the US. It's not the US mentality because you are thinking of structuring the deal, and I think we'd say the same thing in Europe that we are, but it's just to another level, right? Because
that's right.
You're at a point where having 15, 20, however many.
Nah, but it's obvious, right? If we look at the ecosystem in the UK, if we look at specifically at the early stages, and if we look at the syndicate dynamics of small angels coming in and whatnot, what we see in London, we don't see I'm from Lisbon, right? I don't see in Lisbon. You don't see in Copenhagen. I'm sure we don't see it here in Bucharest, right? It's a maturity level.
Yeah, it's a maturity level thing. And I also think it's just as you see more operators come in, also I do think as reputations rise and fall, like running VC funds are hard, right? Like that's like a slog. And so I think you're going to see a lot of people drop in. You see a lot of people come in. We have those same dynamics just on a much bigger and wider, sort of like larger schedule. So a lot more players, new players coming in, that drives up the competitive level. And I also think founders have a lot more choices in the US where it's like, no, I'm gonna pick this and this one. I want different people around the table to optimize. Like I want someone who's really, really good in B2B. I want someone who's really, really good at recruitment. And I think that's, as long as you can show value and very, very clear sort of like, I can help you with these specific things, like it's in many cases, a lot of the best deals, you're fighting to get into deals where, please take my money. Here's the things I'm going to do for you. I think it's a supply and demand issue here where there's still the money, there's still not as much money and still lots of sort of like startups. So the leverage is still on the money side. And I don't think that's the case in the US where I think it's a little bit more balanced. And you also have a lot of super angels who can say, okay, screw these VCs. I'm literally going to lead this round myself because you have a lot of like billionaire like investors. I'm just going to lead this round myself. But you're starting to see a lot of founders and doing that as well too. So it's a very different dynamic. So I'm not saying, I do think it is, we'll get there. And I'm a big fan. If I wasn't, I wouldn't be here. But I think they took it in the wrong way. But I don't think they have the cooperative dynamics yet. And there's still a little bit of the win-lose mentality. I think partly because a lot of people come from banking.
And private equity, right?
And private equity. Especially private equity, you have to flip your entire mindset because they protect the downside. I'm like, I literally don't give a crap about this. I can only lose what I put in. What I care about is actually the upside. Like all my winners came from a very small subset, maybe 5% of my portfolio. The returns just outweigh, and that's the business. And I'm not totally sure they completely understand the business.
So I don't think it's a question of understanding. If
maybe it's a mindset thing. Maybe it's
mindset. And a structure and a behavior. What are we used to? Because when you say a big cap table, you think of a completely different number than when a European person thinks about a big cap table. And both of you say we want to have a lot of people with great competences around this round. So for that reason, we want a big cap table. There's just a big difference whether a big cap table means 30 people or 10 people or 7 people.
But the devil lies in the details, right? Because what we always also see in Europe, and the US went through that
Yeah,
Long time
10 years ago. 10
what
years
we
ago.
see in Europe is now we're seeing a shift of messed up cap tables for founders at the early stages going, and we're seeing a kind of conglomeration of those tickets through SPVs and syndicates and whatnot. And what we're saying here almost feels like it's the exact opposite. But the devil lies in the details, right? I'd love to hear you comment on that, because it's not about having a big cap table. It's about what every single line in that cap table is bringing to the table.
Yeah, exactly. So for me, of course, like if you actually talk to a lot of founders, the best value they got was actually not from the biggest check. A lot of times it's from like these operating angels or fellows sort of like you know,
That didn't even invest direct, but were part of a syndicate led by whoever.
Yeah, exactly. Syndicates are amazing because you can aggregate a whole bunch of like operators who are like, well, I can't write like the 50K check. I could write a 5 or 10, but you aggregate a bunch of these. Like, have you heard the go-to-market fund? Like, it's run by a friend of mine, and they're actually based out of Miami right now. So this part of the sales hacker community, so long-time B2B sales community, and all their LPs are like, literally, it's a fund now, and all their LPs are all like chief revenue officers, head of sales of like pretty much the who's who of B2B in SaaS in the US. So you think about like, if he wants to get into any deal, you're like, I'm always going to find some check size. If I'm a B2B sort of founder, I'm always going to take like some, I don't care, 250, 500,000. I'm always going to take a check from you because I literally can go and like call all these people who are your LPs who are experts, who basically built these like massive B2B companies. No brainer, right? Like no brainer. So finding your differentiation is really important and your edge.
Let me ask you something on this collaboration, cooperation topic. It's my perception, and I might be wrong, that's why I want to ask you specifically. It's my perception that in the US, there's also a more kind of open mind approach to even sharing LPs to some extent, which in Europe, I can say that is not the case.
Yeah, for sure. So when my friend Sheil, he left 500 FinTech, we all left around the same time. And when he left, he went to go raise Better Tomorrow with another, so X500 EIR. They're amazing fun, by the way, like they're crushing it. And he got, like, I sent a bunch of LPs, and I think one of them actually ended up converting, like small LP, but like a lot of other VCs were like, hey, go talk to my LPs or whatever, because you're good, because this idea just is win-win. We're like, we know Sheil and Jake are awesome. It makes us look good, right? And I know these people are going to deliver, and I know the LP is going to be super happy. Like that LP, like he's so happy. He's like, I want you to be my advisor, boy. He runs a family office. I want you got me to this like amazing deal, right? And I'm bragging to all my other rich friends about like I'm in this, and now that makes me look good. So like,
and they want that just as much as they want access to the direct co-investment.
Yeah,
they
exactly.
It's the same thing for them, right? They want the allocation into a hot asset that's good for them. So it's funny how in Europe we still have too many that are thinking of it as, okay, share of wallet. If I give them someone else, then they won't have 500K for me next time. You're like, nah, it's probably not how $1 billion.
I understand that thinking, but I also know why it's wrong, because this idea, just like, if you make the LP happy, they're going to find like, you're like, wow, these folks are awesome. You referred them to me. So you must be pretty awesome too, right? Because like hangs out with like. So, I do think that actually really matters. So for example, if there is a fund manager for example, I've sent folks to Bogdan. I'm just like, Bogdan's freaking amazing. I'm a huge fan of like what he's building. And if you let me, I might even be a small LP, right? Like I'll do an LP check where it's like, I have conviction. So I would only send LPs to like funds. And I send tons of LPs, like family offices and stuff, to folks where it's like, they're awesome. And so win-win, the LP wins, the fund manager wins. And if it happens, it makes me look super good. Like selfishly, where it's just like, but I also think a lot of people don't play the long game. So like, I'm planning on doing this for the rest of my life, right? So you want to sort of like put good stuff, like karma, right? I think this like karma points, like you want to be helpful to people. You want to do these things. I don't want to be transactional where like, oh, I'm going to talk to you because I'm going to get something right away. Like that's a sad way of looking at life, like we talked about like yesterday.
Yeah,
right?
yeah. Since it's Diaspora Ventures, what diaspora? Is it all of Europe? Is it primarily Eastern Europe?
All Europe. All Europe, man. All Europe. I think there's something about European founders. US market's so different. And so where Carlos and I can be helpful, we've worked at tons of companies who've come over to the US market. It's just different. right? We can make certain introductions, whether it's like customers or specific fundraising, thinking about rounds. Also, we can go to market strategy. It's so different because we've done this stuff before. And so being able to help specific at those type of things. But I also think there's an element of self-selection where you're going to leave. Europe is wonderful from a quality of life perspective. I love the US, like it's been really good to me, but I mean, they're business savages, right? And it's like the quality of life, it's a great place for business. From a quality of life perspective, it's not that great, but we self-select for business, right? It's an amazing place for business. And so you really have to raise your level. And we try to find that in founders. So you self-select when you pick the US market, and you can't do this from Zoom. You actually have to be over there.
Do you live in the US?
I live in San Francisco. I live in San Francisco.
You do. Have you thought about moving to Europe?
I'm out here probably 50% of the time of the year. So I'm out here a lot. So I'm doing the dumb digital nomad, right? Like you should be living in the nice and lower cost, lower tax place and then going to the expensive place. And I'm like staying in the super expensive, highly taxed, dystopian place, but like going the other direction where I'm like, yeah, I'm like the opposite digital nomad and opposite of geo arbitrage, right?
Yeah, but it's part of your secret sauce to some extent, the fact that you are there, right?
Yeah, it's helpful because it helps you, I think, as an investor to recognize, I use this term all the time of like, understanding local maximum versus global maximum, why I have such a huge respect for this region. They're hungry, right? Particularly Romania, CE region, they're hungry. And I do think that self-selection of just like once they understand what the limits are, there are no limits. All the limits are actually set in their brain where it's like, I can only really build a $20 million company. I think it's different when you see like, wow, look at all the people around me who are building like 100 or 500 million or $1 billion companies. You're like, the limits get removed. And I think a lot of times that's what they need to see. They understand local maximum when they actually should try to be measuring themselves against global maximum. And that's the same thing with investor, where like, okay, great, like you're a big fish in a small pond, that's fine, you can still do well that way, but wouldn't you want to be sort of like competing against the best, right? And so that allows me to, being in the US and being in San Francisco, like it really helps me understand sort of what the levels are and working with founders who want to push those limits, right? So I'm working with an amazing founder from Latvia now, and he's like, he wants to go big. He's just like, yeah, he's moving his family to the US, and he's like, I'm going big. And I'm like, yes, I want to see that. Because he sees like, wow, look at all these people. And those people are all morons, and they raise more money than I did. I'm going to kick their ass, right? And so it's good. Like it gets like, for some people, it's very demoralizing. For other people, it's like, it gets all my best founders. Like it really gets them like juiced up where I'm like, yeah, this is my game, right? Like I want to go win. And that's how they do it. And so all my best founders, like, the guys from Aircall, they're from France. He moved his family to New York, and they're crushing it, right? They had 100 million revenue last year. Folks at Shippo, crushing it, right? You know, Rapid API, like the Israelis, crushing it. I moved over to the US, lives in San Francisco. Like, you see, a lot of these founders are like, just, they have to move to the US because you're the average of the 5 people who spend the most time with.
We always end our episodes with a quick fire round. We ask you quick answer questions, 30 to 60 seconds each. You ready?
I'm ready.
First question, what areas, technologies, or sectors excite you the most that people around you don't really care that much about?
You know, a lot of people bag on Web3. I'm still very, very optimistic on Web3, mainly infrastructure companies. Yeah. I'm still very excited by enterprise/SaaS, developer tools. It's super unsexy. But you know, the cloud penetration of this technology in most companies, it's still like 25%. Like it's a huge market. And everyone's like, it's boring. I would say those are probably the two biggest areas. And I do a lot of deals in these areas. I love the unsexy stuff. I love the stuff that other investors hate.
We love that. Second question is, most of our listeners are GPs and emerging GPs in Europe. Many of them are out there fundraising.
Oh my God, it's so hard. So, I mean, here's the biggest thing that you want to think about as a GP is just like, what do you bring to the table that makes you unique? And like, just, you know, what's a differentiating factor? That's super hard to figure out, right? Like, do you have some unique deal flow? You know, do you have a track record? If you don't, then what's your thesis that's so different? Like, I don't want to see another future of work, like VC, right? Like, there's like millions of them. Like, what the hell does that mean, right? Like, just, I think it's very specific. Are you focusing on a specific region? Are you focusing on a specific sort of like vertical? What do you bring to the table? Do you help with recruitment? Like, how are you going to help your companies? Like, I look at tons of VC decks, and I'm like, wow, this sounds like literally the 1,000 other decks that I've read. Like, there's just like, you could be. This literally is just the same deck, just different people, right? Like,
it's almost like you take a best practice deck and then you just change the names and a couple of numbers, and then then you think that because I'm now complying with best practice, I will be able to raise. Would you ever invest in a startup because they said, "Well, we're going to do the same as Facebook"? Like,
No.
That's not how it works, right?
Yeah, exactly.
Well, it's what makes you different and unique, and that's really, really important. I think a lot of emerging fund managers don't think about that enough. They're like, oh, this investing thing looks like fun, and I'm just going to do this, and this sector is hot and sexy, so I'm going to do that. And I'm like, well, experienced LPs, we want to understand as we're building out our own portfolio of fund managers, we want to know how you fit in that overall portfolio. And if it's like some bland sort of like fun, you're like, yeah, why would I do that? That literally makes no sense. It doesn't build up my portfolio properly, right?
Third and final question of the quick fire round. It's my favorite one, which is, what's the most counterintuitive thing you've learned since you started Diaspora Ventures?
I think there's two of them. Number one, you have to develop your own sort of like conviction for companies. All my best performing companies were very controversial. So for example, if you have consensus where everyone's like, oh, this is great, whether it's your career, whether it's a company or whatever, all my consensus decisions were terrible. It ended up not being great. All my non-consensus stuff, where that's really hard, right? Like you're standing against where it's like, wow, like when I was at 500, we started doing a lot of B2B deals in 2014. And that was not, they're like, what are you doing? Like consumer is like the way to go, right? Like this is a wave.
So funny how things change.
And it's changed now. Now it's like,
so funny.
Now everything's like B2B. And then like everyone, like, why would you do consumer? So which makes me think like, I probably need to be focusing a lot more energy on consumer now, right?
It's like fashion, right?
Yeah.
It comes and goes.
But it's so hard because you see like, oh, look at all these super smart people doing these deals. So like, what am I missing? And a lot of times they're probably not missing anything, right? Like you have to sort of come up with your own view. And so it's basically it's really hard to do, but like do deals that are like unpopular. It's like that old saying is like, you kind of have to be prepared to sort of be misunderstood for a long time and be willing to be seen as stupid. That's hard.
It is.
That's hard.
Speaking of fashion, we have Ennis from 500, emerging manager or emerging Europe, but knocking on the door saying, let's do our episode now. So we need to wrap this up. He's a good friend of yours.
Yes.
Want to send some nice words on the way?
Yeah, like I said, I think their thesis is like super, super smart, right? Like he's doing exactly what he should be doing, which is focusing on a region that is really underserved. And I also think this entire region is going to grow faster than, I'm going to spend the next like 3-4 years just like investing in this region myself. I think this is going to be the hottest region for the next couple of years. So I'm very bullish.
Couldn't agree more. And we are doing 3 LP investments into the region for the same reason. So absolutely. Awesome having you with us, Marvin.
Thank you for having me, man. This is fun. This is fun.
It's fun every day.
Yeah.
Every single fucking day.
Thank you for listening to this episode of the European VC, the go-to podcast for everything European VC. If you love our show, share it with your friends and join us in the EUVC community syndicates at theeuropeanvc.com. Want to be on top of who the best up-and-coming emerging VCs in Europe are and maybe even invest with them? Register for our newsletter at theemergingvc.substack.com and be the first to get in the know.